All right, so now let's finish up Coffee Cafe. Now, in this case, right, even if your statement of cash flows does not match or pan out evenly, that's okay. Again, it doesn't really affect the next step at all because um, once you complete the first main three, you're pretty much good to go. The statement of cash flows just basically tells you how much money and where your money went, right? The statement of cash flow flowing in and flowing out. It's not as relevant as it is as or important as the first three that we just did, okay? So in this case, statement of cash flows can be considered one of those optional statements to do, but as again, this is how you would do it. So last step here, so we finished step 8. Step 9 is to complete the to close out our books and to close out our temporary accounts. Now, what does it mean to close out our temporary accounts? If you remember from our lesson in chapter 13, right? Step 9 is to close out your revenues and close out your expenses into the income summary, right? And then you're going to close the income summary to your equity. Now, in this case, how do you close them out? You basically zero them out by looking at their account balances and then so on and so forth, okay? So in this case, right, we need our ledger and our journal here. And what we're going to do is we're going to go through all of our revenues, right? Because revenues is a temporary account, and we're going to zero out each account. Now, what I want you to do is I want you to just go ahead and do it simultaneously. So you don't have to do all of them and then go back and zero them out at the same time, okay? Or zero them at the end of the day, right? I want you to do it simultaneously because you're going to have to keep bouncing back and forth from your ledger to your journal. So in this case, right, we are looking at closing out our revenues to the income summary. Now, my revenues, as you can see, right, my revenues has a normal credit balance. So in order to zero them out, you're going to be debiting out all of your sales, right? All of your income, you're going to be debiting each account to zero them out. And you're going to be crediting your income summary. So in this case, right, if we understand that much information, we can now say, okay, so for our first one right here, we have our sales for regular coffee. That's our first account that we are going to be closing out. Okay, and here we are in our journal, right? We're starting on page 24 here. So sales regular coffee, right? Account number 450. Right now, there's a current credit balance of $1,300. Okay, let me see. Let me try to make this so I can have enough space to be able to put the transaction in here. Okay, so we have a debit balance that we need to put in here for the $1,394.96, right? That's how much my sales for the regular coffee is for. And because I'm debiting out, I can go ahead and just close it out directly right here. So this is what I was talking about, bouncing back and forth through the ledger and the journal, right? So in this case, that's exactly what I'm going to do. I'm going to go ahead and put in that I am going to be debiting this account and closing it out, $1394.96. So that on the debit side, so that should give you an account balance of 0. Okay? So I'm going to be transferring from the journal to the ledger, well, ledger to get the account balance to the journal, then back to the ledger. So might as well Just do it all at once. Okay, so that's the first entry I've done so far. So the second one is going to be my sales Supreme Coffee. Okay, account number 4100. Okay, and right now it has an account balance of 14,360. Okay, 14,360. And that means I'm going to close it out directly right here. Okay, I'm going to close it out here. Excuse me. Close. Page 24 for the 14,360, and that should give me my account balance to 0. Okay. Next one we have here is our sales for ceramic coffee mugs. Okay. Account number 4014,150. And the account balance here for my ceramic coffee mugs, right? I need to debit this, okay, at $1,763.91. Okay. And I'm going to close this out. For the 1763.91, and that should give me an account balance of 0. Okay. Next one is going to be your sales medium regular coffee. $4,300, and that is, we have account balance of $5,221.76. Okay, and we're gonna close this out for the 522,176, and that should give me an account balance of 0. Okay. Next one on the list is the sales for the large regular coffee. Okay. For a total of $6,503.25. 6503.25. Okay. 24 for the 6503.25, and that should zero out this account. Okay. 6503.25. Next, we have our sales for the medium supreme coffees. Okay, for account number 4450, for the total amount of $66.5577. 66.5577, and then we're gonna close this out. Okay. And that should zero it out. Okay. Then we have our sales for the large Supreme coffee. Okay, count number 4,500 for the grand total amount of $7,524.44. 24.44. And we are going to close this out. For 7,524.44. That's going to give me 0. Okay. Sales returns and allowances, right, has a debit balance. That means we have to credit this amount. So in this case, I'm going to skip on forward just in case like I have any other debits I need to do first. Okay, sales discount, same thing, has a debit balance, so I have to credit this account. So last one I have here is delivery income, which is my last credit account here. So therefore, that's what I need to include, my delivery income. Okay, count number 48,000. Okay, and in this case, I need to debit this amount by $300. So therefore, right, I'm gonna close this out here. For $300 debit, so that should give you a 0 balance. And next is interest income, which we don't have. So going back to those last two that I have to close out, which is my sales returns allowances, since it has a debit balance, in order to 0 that out, I would have to credit the account. Okay, account number 45,000. And I have to credit the account for $19.96. So that's what I have to do, okay? For $19.96, I have to credit this account, so that should bring my account balance to 0. Okay. Last account that I have here is going to be my sales discount. Which is account number 46,000. And my total discounts is in grand total of $1,979. $1,979. Okay. And then I need to close this out. For a credit of $1,979. So that should give me an account balance of 0. Okay. And of course, last but not least, what account am I going to be crediting at the end of the day is going to be my account called the income summary. Right? And that is account number 3,999. Okay? And it's going to give me a total credit of, well, in this case, I need to do my debits and credits, right? If I do my equal debits and credits, right, I'd be able to solve for this much more easily, okay? So equal sum Okay, so equal debits. Okay, I have $30,849, and I have 19.20 and 75 cents. So in this case, I need to figure out what 3,849 minus the 19.20. Hold on, let's do that again. I can also do this where I could minus the difference here, and that will give me, it'll give me this number right here. It is 2,879.74. There you go. Even out. Okay. So that means that's how much income I have closed out. So in this case, I also need to make a post to my ledger that I closed out, closed all revenues. Okay, we're on the 24th, and it's a credit balance of 28879.74. Okay, 28879.74. Okay, and of course, my note here is going to be to close out revenues to income summary. Okay. Now the next section is going to take up way more than this amount of space right here, because I have to now close out all of my expenses, which includes the cost of goods sold and my operating expenses. So in this case, I do need to draw a huge line, because this is definitely a lot of space that you can add an actual transaction in, because I know, I'm going to tell you this, that we will not have enough space to put in all of the expenses. So I know for a fact that we will be utilizing this. We will be needing to go on the next page. Okay, so here, bottom of the page 24, making a thick line, okay, because we know that there will be we need a lot more space in this, okay. So that means we're going to start our next set of transactions on the journal here, right? We're going to be using up a lot more space, and then we need to also figure out what we're going to be doing here. So we are going to be crediting all of our expenses because they normally have a debit balance. We're all going to debit that all to the income summary. So that's the first thing I'm going to recognize is the income summary. Okay. Now the income summary, right? We don't know what this number is going to be equal to, because right now we need to close out all of our expenses. So we won't get this number until last, right? We'll do an equal sum to give us a total of all of our expenses, including the cost of goods sold. But what we can do is we can now know, right? If every single account that we're going to be zeroing out for my expenses, I'm going to be crediting them because they all have a normal debit balance. So we're going to start with the first account here, which is my cost of goods sold expense account. Okay, and it's going to be for the cost of goods sold for the regular coffee. So we know for a fact this is all going to be credited. So cost of goods sold regular coffee. Okay, this is account number 550, and it has a credit balance of $1,406.03. Okay, so 1406.03. And since I'm going to just be going ahead and inserting all of these in at the same time, I'm also going to close it out on my ledger account for the 1406.03. And that should give you an account balance of 0. Okay. Next, we have here is my cost of goods sold for the Supreme coffee. Okay, so cost of goods sold. Of 5,100. Okay, and this account balance is at $14.86 and 61 cents. Okay, $14.86.61. Okay. And we're gonna close this out. Oh, we're on page 25 now. And we're gonna zero this out by 1486.61. And that should make the account balance to 0. Okay. Next we have is our ceramic coffee mugs, right? So in this case, cost of goods sold, ceramic coffee mugs. Okay. Account number 5150. Credit balance for the $1,182.43. Okay. We're on page 25 here for the 1182.43, and that should give you your account balance to equal 0. Okay, 1182.43. All right, so let's see what's next. And we have my cost of materials, right? So I have cost of materials for the medium coffee cups. Okay, account number 51200. And has a credit balance of $287 and 10 cents. $287.10, and that should give you an account balance of 0. Okay. Next is going to be the cost of materials for the large coffee cups. Account number 51250, and we have a credit balance of $351.68. Okay. We're gonna close. For the 351.68. And that should give you an account balance of 0. Okay. We have our sugar. Right, for the $43.20. Sorry, I worked a little backwards here. So, cost of materials for sugar. Okay. For $43.20. Okay. Last but not least, I got the cost of materials for the creamer. Okay, for a total of $359.26. $359.26. Okay, $359.26. Okay, and that should also give you your account balance to equal 0. Okay, 359.26. So that's all of my cost of goods sold. Now I have to go through every single expense that I have incurred. So first one I have here is advertising expense. So this is what I meant, that you need a lot of space for this one. Yes, you could have done this too. You could have separated your cost of goods sold first and then your operating expenses, but at the end of the day, they're all going to the same account. So it doesn't really matter how you want to separate it. In this case, it's just easier if I just put them all together in one. Okay? Because they're all gonna all end up in the same account anyway. So advertising expense, okay, account number 6,000 for a total of $185 credit, and that's what I have to remove. Which will give you your account balance to be 0. Okay, for $185. Okay, next we have is my bank fees, nothing there. My business expenses. Okay, business expense, okay, was for $1,282.78. So 1282.78. Okay, so I need to credit that amount out. 1282.87. And that should give you your account balance to 0. Oh, okay. 1282.78. 1282.78. Okay. Next I have here on the list is going to be my freight expense, which is zeroed out already due to my conversion entry. So I have next is going to be my insurance expense. For $195.83. Okay. So I'm going to close this out as well. For the 195.83. Okay, so which should give, actually, I have to do the formula. It's going to give my account balance to 0. Okay. Next I have is interest expense, nothing there. Labor expense, nothing there, but I do have a subcontractor expense. Okay. Okay. Account number 6510, which should give you an account balance of $1890. Okay. $1890 off of the subcontractor expense here. Right, we gotta close this out. Which should give me my account balance to 0. Okay. I also have to close out my temporary work labor. Okay. Which was a total of $360. $360. So that should be zeroed out. Okay. Next, I have license and permit expense as well as loss on disposal of assets. So I have to zero that out. License and permit expense. Okay, I'm also going to throw in my loss on disposal of assets. Okay, so account numbers, 6,600 and 6,700, and let me see, my license and permit was $375, and my loss on disposal of asset was for $2,000. Okay, so there you go. I'm going to go ahead and close these all out. And then, of course, on the loss of disposal of asset, for $2,000. And that's going to give me 0. Okay. Next, we have here is office supplies expense for $70. For $70. Okay. Next is payroll expenses, starting with my salaries and wages expense. Okay, I'm also going to throw in my commissions right here. And account number 6810 and 6820. So for my salaries was $800. My commission was $560 and 66 cents. Okay. So I'm going to close these out now. Okay, and then I'm going to close out my commissions for that $560.66. Okay, 0. We have some payroll taxes. Okay, so payroll tax expense. Okay, for $144.08. Okay, for the $144.08. Let's see what else. Purchase expense is 0 right now. My purchase returns allowance is 0 right now. And my purchase discount is at 0 right now. I have rent expense. For a total of $1,500. Okay. I have some travel expenses. For a grand total of $271.07. Okay. No utilities, no bad debt, but the last two I have is depreciation and amortization expense. So I can close those two out at the same time. Right, for depreciation expense and amortization expense. Okay. Depreciation for 66,000 and 66,500. All right, those are the account numbers for the grand total amount of depreciation expense for $655.08, and my amortization for $11.67. All right, and that reaches the end of my operating expenses. So let's take a second to close them out. Okay, and my last but not least, amortization expense. Okay, 0. So that means I just have to finish up my description, right, to close out expenses to income summary. All right. And that's going to, right, this one's the easiest one because since all of them are all of my total credits here, so I can just go ahead and run my formula to calculate the grand total of all of these expenses here. So, okay, so that's going to give you a grand total of $15,417.48. Okay, 15,417. And let me see. If you go to your statement of income statement, this usually should match. All right. Okay. So I'm off by $5,000. I must have added something in there. Oh, I plus the total of the cost of goods sold. So these are included into that. So yes, yeah, good. So you can double check and confirm with your income statement, but right now, what you're gonna do, the main goal is, did your income summary end up at 13,462? Well, I don't know. Let's go ahead and double confirm that. Is that true? Well, that's the last thing I need to put in there is my income summary. So I need to go to my income summary, which is an equity account. Okay, here's my income summary, right, where we closed all expenses, okay, which we debited the income summary for 15,417.48, okay, 15,417.48. did this give me my grand total of that $13,000 income? Let's see. We got, let's do this calculation one more time. Right? Since it's normally a credit balance, you got $13,462.26. And did that match your statement of income? $13,462.26. So yes, it did indeed match. So that means, what does that mean? That means we did our calculations and we closed out our income and our expenses out, and we did it correctly. Okay? So now, next step is I need to now reinvest that money back into my company, because that is what I did. I did not take out the profit. So that is something I have to do. The next step is I need to close out my income summary to my equity. Now in this case, right, I currently have a credit balance. How do I zero out my income summary to my equity? Well, in this case, right, in order for me to get to zero in my income summary, I have to debit my income summary, right? And that means I'm going to credit my owner's equity, right? Because in this case, I had a net income. That means that's going to increase the value of my equity, right? Exactly how I have it here, right? By debiting the income summary, okay, you are going to be essentially increasing your equity because you're closing it out. And equity is account number 30,000, right? So you're going to be closing it out by 13,462.26. Okay, 462.26. Oh, typo again. 13,462.26. Okay. 14,462.26. Okay. And that is it, what we're going to do, right? And I'm going to finish up my journal saying I'm going to close income summary to equity. Okay. So that means, let's see what happens when I post it to my ledger. Okay. So the first thing I did was I closed out, close to incomes, close out to equity, right? For the we're debiting the account by 13,462.26. That should zero out your account balance here. And what we're going to do with this money, we're going to put it into my equity, right? Because in this case, right, we closed out income summary, which gave us a credit balance of 13,462.26. So that should have increased your equity to a total of 43,460. Oh, no, that didn't look. That did, yes, right? $43,462.26. Okay. Last thing we also have to do is we have to close out everything out to equity, which includes the owner's withdrawal. So in this case, I also have to close out my owner's withdrawal. In this case, I have a debit balance in my owner's withdrawal. So that means I need to credit this out to my owner's equity. Okay, and since I'm debiting my owner's equity, that means I am decreasing the value of my equity because I reflected in owner's withdrawal, right? But that makes sense, right? If you take away money from your company, you are decreasing the value of your company. Okay? And then, right? And how much are we decreasing it by? $3,000. Okay? And right here, to close out withdraws to equity. Okay, so let's see. Since I'm already here, right, in my owner's withdrawal, go ahead and we'll just close it out now. Right, which decreased, right, I credited my account by $3,000 to the owner's withdrawal. That should bring me back to 0. And since I closed it out to equity, right, which gave me a debit balance, right, or a debit to this, right, that should decrease my value down to $40,462.26, which, what does this number match to? This number matches your statement of owner's equity, right? We solved for it. Right now, we are currently at $40,462.26, right? So once we've done the statement, the financial statements, right, we have to reflect it in our account balances by plugging it back into our ledgers. So there you go. This ensures and guarantees, right, everything that we've done so far is matching up, okay? And that's the last of this transaction in general. So you can even wrap up your books and say that you even closed it out. Okay, by putting in that bar right there, saying that I closed out the books. Okay, and that means you are completely done with your journal and your ledger, because the last step that we have left is to do the post-closing trial balance. Right? We close the books. So that means you can save your journal, okay? You can save your ledger, okay? And all you have to do is complete the post-closing trial balance. And how do I do that? It is easy, right? If you take a look at your post-closing trial balance and compare it to your balance sheet, they are almost identical, okay? All you have to do here is what I like to do as a shortcut is I delete this post-closing trial balance and I just simply make a copy, right? I make a copy of this balance sheet, okay? And what happens is, since I put it right before cash flows, I'm going to move it over, okay? Rename this to post-closing trial balance, okay? And I'm going to rename this sheet up here because it says balance sheet on it. I'm going to type in post-closing trial balance. Right? It's still on. Oh, I guess I didn't fix that. It's supposed to be on the 30th. Right? And this is basically, you're just reformatting your balance sheet, right? Because you have all the information you need, right? This is your debits, right? This is your credits, right? And we know for a fact, we didn't close out all of our assets, right? Okay, so that what we could do is here, we could just format this and say we can get rid of this row right here. okay? Or this, yeah, this row and this row. We can get rid of them because we're trying to test the debits and credits, so we can get rid of those. And of course, we can also get rid of this line right here and this line right here. Okay, and I guess these lines too.